The crypto world is almost always in a state of flux, with the prices going up and down, the regulatory policies and rules shifting according to the times and temperament of the government, and so much more. Like Twitter frenzies that move the market. Up till now, crypto has had a bit of a rocky ride, especially with the crash that took place in mid-May earlier this month. Let's take a look at what America's Democratic president has to say about crypto, and what you can expect from his administration.
What's up? What are you guys talking about?
If you know how the crypto policies have been in Donald Trump's administration, you know that any change would be a good one. U.S. Treasury Secretary Steven Mnuchin, one of President Donald Trump's closest associates, had been working overtime since Thanksgiving to pass several crypto regulations through before the Biden administration took over on January 20th, 2021. These included a FinCEN proposal that would require exchanges to store records involving transactions over $3,000 sent to any personal wallets, plus report users to FinCEN for cumulative transactions worth more than $10,000 in a single day. For comparison, banks are required to flag cash withdrawals over $10,000, not transactions within the banking system itself, and banks are not required to keep tabs on where the customer spends the cash taken out of the system. So this wasn't a very crypto-friendly sentiment. Moreover, there was also a complimentary FinCEN statement proposed requiring Americans to report crypto holdings worth more than $10,000 at any foreign service provider. Although the details of this were still vague, it's pretty apparent that the Treasury wanted to make note of the Know Your Customer information for anyone dealing with Bitcoin that amounts to thousands of dollars. And, well, naturally, people had a lot to say about these rather absurd policies. The Electronic Frontier Foundation called this a push for more financial surveillance without any need for proper warrants or clauses for suspicion. Bitcoin users already need to report their holdings and their taxes just like any other asset. And so, over 65,615 crypto advocates submitted critical statements to FinCEN, including companies like Fidelity and Square. Square's statement said the company would be required to collect unreliable data about people, recipients, who have not opted into our service or signed up as our customers. Now, is that really necessarily valid or needed? Moreover, Coin Center issued a statement saying this proposal would also limit American access to decentralized services where users may not know their network operators. This makes transparency all the more difficult. But, well, as for the current administration, Biden seems to be more inclusive when it comes to the financial center. That's because it appears the Biden administration will nominate former Ripple advisor and former U.S. Treasury Department official Michael Barr to the head of the OCC. In the short term, Trump's SEC appointee, Commissioner Hester Pierce, will continue her notoriously crypto-friendly approach to the securities market. But the Biden administration is reportedly considering former CFTC chairman Gary Gensler to soon lead the SEC, so this will be interesting to see. But from a tactical point of view, one of the largest threats seems to be the act of terror financing, all of which is related to money laundering, general supervision of the source of funds, and sanctions screening. And what does the Biden administration have to say about the sanctions, the spicy topic in the crypto world at the moment? While there may not have been any formal past rulings based on crypto, there have been a few statement-making policies that have come to par, like the penalization of BitPay, if seen operating in sanctioned jurisdictions like Cuba, Iran, and Ukraine. The administration right now is focused on encouraging the growth of domestic crypto startups in the United States, with industry leaders and lawmakers sitting down to discuss a framework that helps them all. According to Perry Ann Boring, founder of an advocacy group called the Chamber of Digital Commerce, she says that the Biden-Harris administration and Congress must make clear that addressing digital assets and blockchain policies are a priority. Boring said, "The Biden-Harris administration should be focused now on growing the economy back to full employment and robust quarterly and annual economic growth. Because it doesn't just determine how many proverbial coins you have in the bank, it also affects international geopolitics, finance, and political relations." So what does Biden's cabinet have to say about the digital asset industry? Look, you have to understand that ever since Biden's come to power, the talk about crypto's been in a hush-hush manner, especially taking into account the energy usage concerns, which Janet Yellen, Biden's nominee to head the Treasury Department, has voiced. The former chair of economic advisors during the Clinton administration and the chairwoman of the Federal Reserve System says she isn't shy to voice the fact that she isn't a fan of crypto, and that she thinks the transactions that take place on Bitcoin are illegal. And, well, this just makes it clear that you can expect a Department of the Treasury headed by someone who's inherently hesitant about the premise of anonymous and pseudonymous cryptocurrency to do more along the lines of these enforcement actions to target sanctioned cryptocurrency holders and to enforce actions against certain privacy tools in the Bitcoin space with serious and egregious allegations of dealings with darknet criminals. It is no news that previously Biden has himself been against encryption, introducing 2 bills with strong anti-encryption sentiments while he was in the Senate. In fact, it was his 2 bills that inspired Hal Finney to work on PGP encryption, as well as perhaps Bitcoin itself. But what legal framework impacts crypto in the States? Let's see. If there's a restriction based on self-custody of cryptocurrency, things could get dicey, making the value of giants like Bitcoin take a hit. Some Democratic legislators are also looking to get stablecoins to follow banking regulations. While the law in question has a slim chance of passing, it's possible that Democratic legislators will see an opening with Democratic control of the executive to propose more bills that try to integrate cryptocurrencies and Bitcoin into the traditional financial system. Coming to taxation policies, the IRS during the Trump administration had been relatively loaded, exempting like-for-like trades from tax protections and classifying cryptocurrency as property, therefore requiring capital gains tax to be paid on it when there have been gains. A Biden administration is likely not to do worse, though it will be aligned towards increasing taxes and decreasing privacy, broadly speaking, which might come as a surprise for many. But during the post-COVID period, with tax revenue potentially increasing to counteract an ever-growing national debt, there might be direct increases in taxation of cryptocurrencies through capital gains increases and an ever more present assortment of taxes, including taxes on digital goods, where cryptocurrencies might be caught up. The state's drive to maximize taxation will likely mean that it will look at central bank digital currencies and other tactics to try to de-anonymize cryptocurrency flows with a central stated reason for fighting tax evasion. But from a realistic perspective, and keeping in mind that events have taken place over the last few weeks in the crypto world, especially the crash in mid-May, here's what it's looking like. The Treasury Department published a tax plan that included an entire section on crypto, warning there was a significant detection problem with crypto's use for illicit activities. It suggested that exchanges receiving over $10,000 in crypto in a single transaction should report it. This was after new acting comptroller of the currency, Michael Hsu, announced that he had ordered his staff to review all pending matters and interpretive guidance issued under the Trump administration before revealing in a congressional hearing the Office of the Comptroller of the Currency, the Federal Reserve, and the Federal Deposit Issuance Corporation were discussing a potential interagency group to examine crypto policy. There's also been significant warnings given to bad actors in crypto to prepare for enforcement actions if caught. One pretty significant win for crypto has been on the front that made the Federal Reserve publish its first research paper about a digital dollar would be published, and how a local U.S. central bank digital currency should prioritize consumer privacy and protection that facilitates their activities. And it's safe to say that things might actually be looking up, because even after the past weeks, there are hints of crypto being integrated into the mainstream financial framework, with crypto being accepted as traditional assets or actual money to work with. So things are no doubt looking up. So basically, the Biden administration's stance seems to be, if you comply with applicable laws and regulations, we're game with literally whatever. And in connection to that, the Internal Revenue Service cracking down on those trying to hide their crypto gains, or Gensler's SEC going after scammers or other lawbreakers is actually good. It seems that things are getting into motion as Nebraska and Illinois are getting their own special depository institution crypto banking laws, following in Wyoming's footsteps and taking the industry closer to having banking institutions stemming directly from the industry. But there's still a lot on hold, and we're still waiting for President Joe Biden to nominate some full-term heads for some of these agencies. These agencies' heads will provide concrete evidence on how the administration looks at crypto regulations and what the future holds for the digital assets. So keep your fingers crossed, hope for the best, and prepare for the worst. Food for thought? And that's it for today, folks. Before leaving, don't forget to subscribe to the channel and give this video a thumbs up so you see more crypto-related content. Until next time, Bye.